It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast, covering the very latest in property news. We do that 7 days every week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. And it's a Thursday morning. Tell you what, the week is kind of rattling by up to May the 30th. And you might remember not so long ago, we were talking about management rights and what they are. The good news is we are going to be stepping over all of the ins and the outs for you as we navigate in this space and explore piece by piece just how it all fits together. Because I didn't really know nor understand this part of the market, and you might be like me. So it's a little bit like a Lego set. We're going to put it all together and try and learn and understand it much more better than probably what we do right now. Joining us this morning is Alex Cook. He is a senior broker and director at ResortBrokers, and also Nick Buick. Now, we spoke to Nick once before. He's the founder and CEO of the Onsite Manager. So a very good morning, fellas. Welcome to the Real Estate Breakfast.
Good morning, Craig. It's good to be here.
Morning, Craig. Thanks for having us.
So the reason that people like me might not be in tune with management rights is because people inherently understand real estate. Like, you find a property you like, you then go and see your mortgage broker, your bank, you buy it, end of story. But I'm guessing that if I went into the streets anywhere across Australia and asked people what are management rights, they might just glaze over a little bit. Is that a fair comment to make?
I think it is, definitely. It would depend what city you're in, what state you're in. It's a much more prevalent model in Queensland, so you're probably more likely to get a degree of recognition in Queensland than other states. But it's certainly an industry and a sector that flies under the radar. You know, there's a lot of people out there who fundamentally don't know that it exists or exactly what it is. Hopefully we can unravel that today.
Yes, it's all about exactly that, unravelling it. So for those unfamiliar with management rights, can you give us a brief overview, Nick, of what the industry is all about?
Yeah, so management rights, at their essence, they're a business. So you purchase it with it as if it were a business. But it's a business comprised of a few different components. The main one being the caretaking agreement. So in Queensland, those agreements with the body corporate to look after the building, make sure it doesn't fall down, and do all of the things affiliated with caretaking that building. That forms the core of the management rights asset. And then there's also a letting business that exists as well there. So that's how a manager can derive commission from managing lots inside that complex. And then often there's also a real estate component to it, but be that either an office or an on-site lot that the manager can reside in as well. So there's three basic components that make up a management rights.
I always like to say, in essence, management rights is it's the business behind running strata-titled properties. So any high-rise or townhouse complex where you've got units owned by multiple owners, management rights is the on-site management behind schemes such as that.
Okay, and we should really look at the numbers when it comes to management rights. So can you give us some stats for our listeners to digest and better understand the size and also the scale of the industry?
Yeah, absolutely. We've got an in-house analyst, and we've started putting out an annual management rights report, which gives some stats on the overview of the industry. But it's a much larger industry than most people realise. Probably the total value of management rights businesses in Australia is around about 5 billion. The model essentially runs about 4,000 schemes, strata schemes across Australia, probably about 250,000 lots under management, whether they be apartments, houses or townhouses. Our rough estimate is that the industry probably employs between 30 and 35,000 people, and they manage assets probably totaling around about 120 billion. It's a very significant industry.
One of the key questions that people listening will have is, what are the advantages of management rights to the various stakeholders? Because there are various stakeholders, that's the point. Management rights owners, you've got the unit owners, you've got the tenants, you've got the committees. So, Nick, perhaps step through all of that for us this morning.
There are indeed a lot of stakeholders, and managing the potential conflicts between them can sometimes be a little bit tricky because their interests aren't always 100% in alignment. Fundamental advantage of management rights is that a manager will be invested in that complex, and in that way their interests are aligned with those of the complex because they're a lot owner in that scheme as well. You know, it's in their best interest to ensure that building is run well, the tenants and guests in that building are of good quality. That helps everyone involved in the process, whether they be other lot owners or the body corporate or the committee themselves.
Yeah, okay, so there's quite a lot to it. There's more than meets the eye, and we'll talk more about this in just a moment with Alex and Nick on our Thursday morning after this.
If you're confused about the property market, don't be. Unlock and educate yourself with the latest trending analysis and interviews.
And if you're wondering what is happening on the Sunshine Coast, well, we'll be having a look at the property scene tomorrow morning from 6 a.m. and we'll be talking about some of the key things that you should be paying attention to. Now, younger Australians, particularly those aged between 25 and 29, have significantly reduced their spending unlike any other age group. How do we know this? Well, the latest CommBank cost of living report tells us that this group cut their overall spending by 3.5%, with a notable decrease of over 7% when adjusted for inflation. Both essential and discretionary spending have been trimmed, with essentials down by 3.1% and discretionary items down by 3.8%. This includes significant cuts in health insurance, which is not a great look, is it? Cutting back on health insurance. Also utilities and supermarket expenses, which is suggesting that some people are moving back home or sharing accommodation to save on costs. Now, the interesting thing, and you shouldn't be too surprised by this, in contrast, Australians over the age of 65, they continued to spend above the inflation rate, especially on travel and leisure. Nationally, spending increased by 2.5%, and that is driven by essentials like insurance and utilities, and regional areas showed a higher spending growth compared to metro areas. So that is interesting.
Remember, we are not a real estate company. We are 100% all about increasing your awareness and knowledge for buying and selling properties.
And it is a Real Estate Thursday. We are finding out all about management rights with Nick and Alex this morning, because there is more, as I mentioned just before the break, that meets the eye. And I guess, Alex, in terms of like traditional real estate, we have the highs and the lows of the market. So how is the management rights market performing currently?
Well, look, the management rights market is, for those in the industry, is largely broken down between permanent management rights and short stay management rights. So permanent management rights are schemes where you've got owner occupiers and long-term rentals. Short stay management rights is more your service department, hotel style buildings, Mantra and Oaks being two of the well-known national brands who operate under that model. The permanent management rights sector is very resilient. You know, I started back in the GFC. It's been one of the few industries that banks will lend up to 70% on, and have done for a very long time. And that side of the sector continues to perform well. The short stay sector, as with many hotel style assets, stagnated somewhat during COVID and coming out of COVID. But we're seeing a lot of businesses now that have got good year or 2 years trading post COVID, which means they're in a good position to sell. And we're starting to see a lot of short stay businesses transact as well. So particularly at the bigger end of the market. Big businesses with lots of units in the scheme with high net profits, they're highly desirable assets, and they transact very well.
Let me come back to you, Nick, because I remember when we were first talking, you were sort of mentioning that whole COVID situation and the fact that we've now come out of COVID, because it was a little bit of a testing time, if my memory serves me right, when it comes to those management rights, but we've sort of come through that. Things are looking, as Alex says, much better.
Yeah, interestingly, Craig, just before COVID, there was around, on our website, which has all of the management rights for sale, there was around 1,600 listings for sale. Now, some of them were in duplicate because they were multi-listed, but quite a large number of schemes that were up for sale. At the peak of COVID, that dropped to about 300. So a lot of people just didn't have good financial data over that period, obviously running hotels and such. So yeah, the number of sales dropped significantly. At the moment, it's sitting at just under 700. So there's been quite a big resurgence, particularly over the last 12 months of listings coming back onto the market, which is good to see.
And in terms of financiers, did they have to kind of pivot a little bit, like understand the market that we are in is rather unique in terms of post-COVID? Did they sort of make any concessions around that?
Because they are going concern businesses, part of the purchase process of buying and management rights, there's a lot of due diligence that goes on. So you'll get an accountant to verify the income, you'll get a lawyer to do a legal due diligence, the property will be valued before it hits the finance broker or the bank. So I suppose there's a lot of protection processes within the transaction process to make sure things sell at their true value.
All right then, well, we'll wrap it up there. Always good to get a couple of experts talking about any given subject on at the same time. So thank you so much, Alex and Nick, for stepping us through more of the management property rights, and we'll do that in about a month's time. So thanks for that, and enjoy your Thursday. Thanks for coming on to the Real Estate Breakfast this morning.
It's been a pleasure, Craig, and thanks, Nick. Thanks for having us.
Thanks, Alex. Thanks a lot for having us, Craig.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
I'd just been to the home open and it was pretty busy when I was there, but I was in and out in about 15 minutes, so I didn't probably quite realise the gravity of it. We put in an offer that we thought was pretty aggressive, cash offer with minimal conditions, and we missed out. And so I'm anticipating that even though it was advertised from 999, it must have gone in the mid 1.3s, maybe higher.
But some commentators are suggesting that the start of a slowdown is on. Question for you this morning, are you seeing that slowdown in any way?
Look, if we're talking about the rental side, we've seen a bit more stock come to market. So on that side, we have seen less people at home opens. The rate of rental growth is slowing, and I think that's more likely to hit an affordability ceiling before the sales side. On the sales side, I think it's still trending in the opposite direction.
We connect you to the best real estate information across Australia. The Real Estate Podcast.